So now let's look at a discount example, right? So let's go way over yonder, and let's look at a higher time frame discount example from earlier this year, maybe last year, because I think price has pretty much been bearish most of this year. So let's see if we can get to last year. Let's see. Let's look at a range from last year. Okay, looks like they don't want to give us any data. All right, here we go. Let's look at this range here. All right, let's go from this low to this high. Let's draw our Fibonacci. This low to this high, and then bring it down. So I'm gonna ask you what exactly you see. We're on the 2 hour. So let's see, what do you see, right? So first and foremost, price would be at a discount with this range, right? Now I did this range, but I extended it out so that I could show you this, right? So from most recent low to most recent high, price retraces back into this range. Once it crosses that 50% mark, now we are looking for what? The proper PD arrays, the proper order block and fair value gaps that price will respect and go back into the higher time frame bias direction, which at this time in 2020 was majorly bullish, okay? Majorly bullish at this time in 2020. So as we trade back into it, already you can kind of see a little area over here. Let's zoom in to see what we can see. So we have, maybe we should go on a little bit higher time. Oh, here we go. What do we have? We see, where did price slow down? Here and here. This is the 79% retracement. Now, what is at the 79% retracement? There is a fair value gap, very small, right? Maybe we should go on the 4 hour to see if we can find it a little bit larger. All right, let's go back to August 2020. That's where we did that. Here we go. Year 2020? No, it was 2021. I drew the fib. Okay, come on now. All right, boom. So on the 4 hour, this is a little bit of a higher time frame example, just so that you can see it a little bit clearer, okay? So boom, right here. Darn, that fair value gap did not stay. All right, let's see if we can get it right. Let's see if we can show it how I want it. So on the 2 hour, we've got a couple of things in this area. We've got a couple of order blocks. I'm gonna draw my attention to the lowest down close candle from this little range here. The most significant one to me is this large one here. You could draw it from up here to there, or you could just do this one, this lowest down close candle, because it also aligns with the open of this candle, which is also technically an order block, right? So let's draw our lines here. And let's fix my line up a little bit. So I like my order blocks to be orange and solid. And let's draw another one at the bottom of it. You can use the wicks if you'd like, so just to show that entire area, right? Now, we also have a fair value gap within this area that may be significant going forward, so we'll just draw it out and see as time goes on. So you will have already known what these were before time, right? As price is trading back into this range, we extend it over, and what do we see? This is part of what I was explaining, but I will get a little bit into this now. I was explaining this in the previous video, but I will get into a little bit about using the 50% of the order block range, or the range of a breaker, or what have you. Now, within the Fibonacci, after we have breached the 50% mark, right? That is when, in a higher time frame bias that's bullish, we're looking for buys, but we have to wait until price respects the proper order block or fair value gaps right, and decides that it's going to go back the other way. Now here, you could have seen that price started to slow down, right? There is a fair value, a small fair value gap here, small fair value gap here if we're looking really close, right? And then even the order block, right? Small fair value gap, small fair value gap. So at this mark here, we did see that price respected it and then headed the other way. The only time I tell you that you can take trades is if we see what? If we see the order block, fair value gap being respected, you see an order block, you see a fair value gap, see price trading into it. Boom, you can take that trade. That's a viable trade. Now, that doesn't mean that price isn't going to come back down, because it can, right? You just got to watch and see how the market is breaking down. Now, when it does come back down, you want to be waiting and seeing when price, what levels price is going to respect. If you already have these order blocks or this order block and this fair value gap drawn out, you can kind of see. Now, what happens? For the most part, price trades past the fair value gap, but the order block range seems to be respected. So I've shown you what a premium looks like when you're trading in a downtrend. You're looking for premiums, and then you're framing that order block fair value gap trade. If you can find breakers, then so be it. And the same thing, I'm giving you the discount. What happens when you're looking for a discount within the higher time frame bias that's bullish? We're looking for price to trade below that 50% range of the range, right? The 50% of the range. Let's just go back and show you real quick. 50% of the range, right? If we're looking at most recent low to most recent high, price gets below 50% of this range, we begin looking for order blocks, fair value gaps that price will respect, give us trading impulse, an impulse away from the area that is respected, and begin framing trades with the same order block, fair value gap. If you can find a breaker, then cool. But using that, and then even more so using the 50%, the halfway, the midpoint of these order blocks, these fair value gaps, to give you even more confidence in your trading setup, to give you even more confidence in your trading setup, to be able to have an extra confirmation for you to go ahead and get in the market. Like, it's so serious and it's so beneficial to understand these concepts, right? ICT is teaching these concepts. The stuff that you heard from me today, you might have never heard it because maybe you just weren't listening to ICT's content as you should have been, right? As you thought you were. But it takes time to really get this stuff. I'm giving it to you because I like to give you the shorter version, because I know people like that. And I know ICT likes to do the longer stuff. So why not give you the shorter version from my point of view? Now, this is nothing near what ICT is giving out in his free mentorship online. So I really would like to refer you to it. There's no charge. It's all free. Like, he's doing this for the people. You feel me? So go on ahead and take advantage of that, y'all. But anyways, that's all I got for y'all. Much love. See y'all in the next video.